surprise when it comes to how those premiums get calculated on a year-to-year basis.
What types of things can factor into where those premiums end up in any given year?
Yeah, so there's something called IRMA, which stands for the Income-Related Monthly Adjustment Amount. And long story short, they base your Medicare premiums on your combined income, but sometimes that you don't really think about items that fall into your income. So let's say you raised your family in this home and somewhere in the Northeast you end up selling it and you end up making more than $500,000 on it. Or maybe it's a parent's property or a big stock or a big retirement package. You can actually see your Medicare premiums take a severe adjustment. And that's almost never income that people are thinking about. Like, no, I sold my home. Why should that factor into my Medicare? Well, it can in certain circumstances. And so it is just one area that we look at to say, hey, this is a surprise because it's a tax that nobody faces until they turn 65.
Our guide this month is titled Retirement Tax Efficiency, and there are two different ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. morning and welcome back to the Financial Exchange. It's Mike Armstrong, Paul Lane, and Ben Kitchen with you on the Monday before the July 4th holiday, a shortened trading week with a lot of data coming in, however. So we'll be at it every day except for Thursday this week on the Financial Exchange, covering what is coming out. And just in terms of what we're talking about there, on Friday of this week, the most important economic data point, we'll receive the jobs report for the month of June on this Friday, which is always one of the, when July 4th falls like it does today, July 5th will likely be one of the lightest trade volume days of the year, which does have the ability to move markets a little bit more depending on what sort of information you end up getting there. So we're looking at that this week. Average, or the median forecast for that jobs report, is another 195,000 jobs get created. Unemployment rate sticks at that 4% rate, so we'll be covering that on Friday, like I mentioned. On Thursday, markets are closed. On Wednesday, they close early at 1 p.m. Equity markets do. You'll get some ADP employment data, information on the trade deficit, as well as factory orders. And then on Tuesday, we'll actually get a reading on job openings. So a lot of labor market data going on this week. And all leads into this kind of looming question about the economy, which is, you have seen things get back on track from an inflation standpoint, and at what point does the Federal Reserve and just investors and economic commentators in general start moving their concern about the economy from, hey, inflation's too high, to, hey, maybe we need to start worrying about economic slowdown and recession?
It's interesting, Mike. We follow this really closely for the premise of the show. You're always looking at news articles, and to me, it seems like the overall messaging from any financial journal, whether you look at the Wall Street Journal, Financial Times, or others out there, the focus is a lot more, to your point, on the labor market and inflation. While it's still covered in the headlines extensively, there's a lot more shift of focus and concern to the labor market, because we had on Friday the Fed's preferred gauge of inflation come out for the month of May, where it showed that core PCE, which is the inflation statistic that the Fed leans on, was about 2.6% year over year, down from about 4% last year. So showing some progress. We've also had some CPI reports that have come in pretty strongly, is maybe overstating it, but they've been better than they were to start the first quarter of the year. And now there is much more focus on the labor market. And in particular, if we get a jobs report, Mike, on Friday that indicates further softening of the labor market, perhaps if unemployment is to spike up over 4% and not just stay steady at that level, then to me, and I was going to look at the Fed futures here for the month of September, right now there is a 58% chance that the Fed will cut interest rates in the September meeting, which is right in the middle of the month. To me, that likelihood would go significantly higher if we are to get a weak labor market, weak jobs report on Friday. That's sort of what I feel at this point in time.
Yeah, so let's talk about that unemployment rate for a moment here. And it's certainly not the only factor that matters in this entire decision-making process. Remember that the jobs report that we get on Friday is comprised of two different surveys. One, where we talk about the number of jobs created. That actually does not talk to households or individuals. They're asking businesses, hey, how many people did you hire, and trying to estimate what that means for the overall economy. Separately, they go around to households and talk to a few thousand different households about, hey, are you working? Are you not working? Are you working full-time? Were your hours reduced? How much money are you making? And that number has been on the uptick. Now, 4% from historical terms is an incredibly tight labor market. In terms of where we've been, over the last decade, let's take a look, for instance, in terms of the 2010s. In just going back a decade now, June of 2014, we were still sitting at an unemployment rate over 6%. It took that long after the financial crisis to get it back below that level. We crossed the 5% threshold in 2016, and then we, spent the latter part of the 2010s below that 4% rate. So most of 2018 and 2019, we were below that 4% level, getting to that low of 3.5% right in February of 2020. We're now, back up at 4%. That is not a high unemployment rate by any stretch, but it is up from, again, these 60-year lows that we saw back in 2022 and 2023 of 3.4%. And so if you have companies consistently saying, hey, we're creating a few 100,000 jobs, and yet that unemployment rate still ticks up, that's an indication that, hey, in spite of still pretty consistent job growth, you might have a slackening in the labor market. That's also being backed up by the JOLTS report. So that JOLTS report that we get tomorrow, the number of job openings there are compared to people looking for work. Back in March of 2022, when unemployment was sitting at 3.6%, we had a record 2 vacancies for every unemployed worker. Could have forecast that, hey, unemployment's going to go down further at that point. That ratio now has fallen as of April down to 1.2 vacancies for every person looking for work. So that's really back at pre-pandemic levels. And so the question remains, hey, are you going to get this Goldilocks scenario? That's what everybody's asking is, hey, most times when you start seeing the unemployment rate tick up, as it has, we've seen it tick up over the last couple of years from a low of 3.4% to now 4%. Usually, when you start to get that uptick, it just continues.
Right.
It continues until you hit, peak capitulation, if you will, and finally, sometimes the U.S. government steps in with stimulus. Sometimes the Federal Reserve has then cut interest rates substantially, and eventually that unemployment rate, again, shifts in the other direction. But usually it doesn't just hit an equilibrium and stay there. If it did, would anybody be complaining? Would any economist be complaining about 4% unemployment and 2.5% inflation? No, probably not. Heck, even if it was 4% unemployment and 3% inflation for a decade, I think most people might not be comfortable with that, but most economists, I think, would look at that and say, hey, that's a successful navigation out of the COVID area of stimulus. But that's not usually what happens. Let's put it that way. That's not usually what happens. There is no usual when it comes to the last few years, but when you are looking at normal business cycles, it doesn't usually just stop at equilibrium and level out from there.
And that's why I say that if you do get that type of report, and to be clear, I was oversimplifying with just the 4% metric and us eclipsing it or going above and beyond that on Friday's labor report, but those two surveys combined, if you get weak numbers from that particular report, to me, the way the Federal Reserve is behaving, likely this reinforces this idea that they want to get ahead of things, that typically with unemployment, those numbers ticking up, Mike, to your point, it can kind of snowball very quickly. Yep. So they want to make sure that they get out ahead of that. That, to me, would be the likely reaction. We'll have to see, again, what the numbers come back in. But really what we've seen from a labor market perspective, Mike, I think you did a really good job hitting on some of the key numbers, particularly on those job openings numbers going from 2 to 1 to 1.2 to 1. It's been a period of time now more recently where we haven't seen a huge amount of layoffs. Really, what we've seen is a lot of employees just being retained, but not a lot of employees being added. Now, you mentioned previously that
how do we know? By the way, we know that there haven't been a lot of layoffs, not only just from a lack of news stories of layoffs, but every single week we'll get this. Did I say Tuesday this week? No, it usually comes out on Thursday, so I actually don't know when the weekly unemployment claims are going to come up. But every single week we get a look at how many new people filed for unemployment in the last week. So it's kind of tough for these job reports to significantly surprise us on the numbers of jobs created or lost. But go on.
But basically what we're sitting at here is the employers in this labor report survey have been indicating that they're adding 250,000 jobs a month on average, whereas the survey of the actual people in this country have indicated much differently in terms of only 216,000 jobs being added for the year. The argument is that perhaps we're somewhere in the middle in terms of job creation. At this point in time, where the pivot point is okay, there's been low layoffs, there's been more employees being retained, it's a little bit harder for new entrants in the labor market to get a job. That breaking point is what economists are looking for heading into this Friday's report.
And Jerome Powell himself has looked at these reports and said, publicly in his last meeting, yeah, there's some interesting stuff going on in the jobs report. We're not exactly sure which numbers we want to keep an eye on.
Right.
So, there is debate as to what these numbers actually indicate at the moment.
No question. And no one report is the end-all, be-all. We always do it. We'll get Friday's report, and we'll say, it'd be interesting to see what the next one looks like. But it has to be a string of data that comes together where the Fed would take, serious action.
Let's take a quick break here on the Financial Exchange. When we come back, talk a little bit about global government debt and some warnings from some big central banks. Quick break. We'll be back with that next.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
There are many factors to consider when planning for your retirement, including the importance of your tax liability. This is Mike Armstrong from the Armstrong Advisory Group. Reducing tax liability can be potentially more effective than chasing higher investment returns. If you are nearing retirement and need to understand how to help your investment approach and limit your tax liability, call us at 800-393-4001 and request our new guide called Retirement Tax Efficiency. We'll educate you on ways to create a tax-efficient strategy, as well as the basic steps that make up a sound retirement plan, including how to protect your money in a down market. Call 800-393-4001 and get your guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration is now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
The Bank for International Settlements, which, quite frankly, I don't think anyone outside of very high-end economic circles really pays attention to. I don't know that we've talked about the BIS a single time in the last 3 years, as far as I can recall. But they've come out with a few statements and commentaries about rising government debt, and I do find this piece interesting. And so, remember that this is not specifically directed towards the United States when we discuss this, but warning effectively. By the way, you can think of the Bank of International Settlements as a central bank for all the central banks in the world. And warning of rising government debt, and their point, I think, is the same one that we have made a few times on this program, which is that, well, actually, I'll quote from Claudio Barrio, who's the head of the BIS Economic Department, quote, "We know from experience that things look sustainable until suddenly they no longer do." And that's the concern that I think many might have over the last few years is if you take recent history, you'd actually look at the level of government borrowing from the United States and say, wow, that seems to have worked a heck of a lot better than anywhere else in the world, right? We did not sink quite as low in terms of recession. The inflation that we experienced here in the United States might have peaked a little bit higher than the rest of Europe, for example, but seems to have come down a lot faster as well. And so you kind of look around and say, hey, the model over the last few years seems to have been borrow a whole bunch of money when your economy goes into crisis, and the consequences will be negligible because, what have we experienced here? Borrowed some $12 trillion, added to the deficit significantly. Unemployment snapped back low almost immediately, and inflation, while it was a problem for a period of time, is trending towards a more sustainable path here. I think if that is the lesson that's taken from the last few years, then I do have concerns for global economies, especially those that aren't the United States and don't have the same luxurious position that we have here of being able to borrow quite as much without being questioned quite as much. But you look around, right? There's the big election in France going on right now where the far-right party seems to be gaining a lot of traction. But even that far-right party there, is promising huge increases in spending in order to tackle different issues. But nobody's talking about fiscal conservatism. And I'm not sure, Paul, we didn't discuss whether or not you listened to the debate, but there were barely even any, forget about responses, which they never answer the question, but there were barely even any questions about deficits and, the looming impact on the economy.
To me, it's a huge concern. I probably spend way too much time thinking about it because it is something, Mike, to your point, that you wouldn't point to as an imminent concern, but it's something that certainly should be talked about a lot more frequently than it is in terms of the national debate scale and the election cycle coming up. And to your point regarding the amount of debt this country has seen, certainly COVID made it spike to levels that we really haven't seen since World War II, but this has been building even going back post-2008 financial crisis. Borrowing our way into more economic growth was something that happened over the 2010s to 2020 period as well. It just wasn't to the levels that we're sitting at today. But if something is not done, well pointed out here by the IMF, that we could be at 140% of GDP in 2032 in terms of the amount of debt that this country has. I mean, even today we sit at a level of about 120, which is really significant. And to your point, it's all fine until it's not fine anymore. It's all fine when you are the number one economy and this esteemed sort of reputation, but that can be undercut very quickly, and all of a sudden you see dramatic impacts for the amount of debt you have. Just look at it like 2008 for the amount of borrowing that this country did for leveraging for mortgages for homes. At some point, the debt can reach to a point of no return, and that's when chaos ensues.
Well, and again, what makes this different is we're not an individual and we have a printing press. So
right.
This is a very different conversation from almost every type of debt that American households are familiar with. But the real underlying concern, which is why they point out, right, it's not really a problem until suddenly it looks like a problem. And so to Paul's point, right, when it becomes a problem is when, suddenly or over a period of time, I really don't know which, people just look at the United States economy differently. Mm-hmm. Either it is not the dominant military and economic force out there, and less trade happens through dollars, or all of a sudden, or over a decade period, the rest of the developed world gets their economic situation in order and does reduce debt a little bit, and so all of a sudden, at 140% debt to GDP, the United States is a massive outlier compared to Japan, China, and the European Union. Well, then all of a sudden, or slowly over a period of time, you might have foreign borrowers who say, why, when I can loan money to Switzerland, who has a much healthier debt to GDP ratio and is offering relatively similar interest rates, why would I loan to the United States? Or, we keep doing these fun little conversations every few years where, hey, maybe we should just default on our debt and not pay the interest to a certain borrower or something like that. Hey, why would I continue to loan money to the United States at these ultra low rates when every time I do something they don't like, they lock up my money? Every time, and hey, maybe I'm worried about not getting paid back. That's not a concern right now.
Right.
Like look around at the rest of the world, and the rest of the world is in the same economic situation. They are all, for the most part, borrowing far too much money and not talking about this in any meaningful way. But if the United States does become an outlier, or any other country does become an outlier, then that's where it becomes a problem. Fewer people willing to loan you money, interest rates by necessity go up in that case, and then you run a real problem of just fast increasing deficits.
And you don't want to take political action when it's too late, because in order to take action to get the debt under control, it requires raising tax revenue or cutting spending.
Yeah, it sucks. It's political suicide.
Exactly.
It's political. Let's call it what it is. Fixing this problem is political suicide. You raise taxes and you reduce spending. Or you just happen to sit over a really strong economy, but that doesn't happen for long. So those are your solutions. Sound appealing? Sound like it's going to get you votes? No.
Doesn't get talked about in the debate for a reason.
Yeah. Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are relatively flat as we begin the first week of the month, the quarter, and the second half of the year. The Dow is up just under 30 points. The S&P 500 is flat right now, and the NASDAQ is up 40 points. Shares of Chewy exploded in the pre-market, up 16%. However, since market open, it's down 5%. This all comes on the heels after regulatory filing showed meme stock trader Roaring Kitty bought 9 million shares, amounting to a 6.6% stake in the pet food e-commerce retailer. His other favorite stock, GameStop, well, shares are down 6.5%. Earlier today, Boeing said it would buy back fuselage maker Spirit AeroSystems in a $4.7 billion all-stock deal. Boeing shares are currently up 2.2%, while Spirit AeroSystems shares are up 3%. Verizon shares are up about 1% after Goldman Sachs initiated coverage with a buy rating. Verizon shares will rise amid an improving competitive backdrop in the telecommunications industry, according to Goldman Sachs. And finally, we'll take a look at NVIDIA. The chipmaker is down 1.4% as the second half of the year kicked off. Shares had rallied 150% in the first 6 months of the year as investors added to bets that artificial intelligence will drive profits higher. I am Ben Kitchen, and that was Wall Street Watch.
Let's go a little bit deeper on that Boeing story here, because this is, I think, not only a big one in terms of what are we doing here, but also maybe an indication as to who's going to be the next CEO of Boeing. So if you're not familiar, current CEO Dave Calhoun has announced that he is going to be stepping down, and they're looking for a replacement for him by year end. They've apparently interviewed a number of internal candidates. They've talked to the head of General Electric as a potential CEO, and they've also talked to the CEO of Spirit AeroSystems as a potential candidate here. Shanahan was internal at Boeing for years, stepped aside during the Trump administration to serve in the Department of Defense, and has since been the CEO of Spirit AeroSystems, but not for very long. I guess let's start there. This is Boeing. The company is looking for a new executive. I've mentioned that, of the short list of candidates that we have seen, at least Shanahan has a background in engineering. He's an MIT trained engineer, so there's something there. The problem that I see with him as a candidate is the same one that most of the people they've talked to is he spent his entire career at Boeing, which is a cluster right now. It has been for a few years and was when he left. So there's nothing about him like, he didn't leave in 2011 before all the problems. But no, he's right there until 2018 when he went to go work for the Trump administration. So there are problems from that perspective. I don't know that you're going to find a perfect candidate here, but I certainly don't think that Shanahan, is that perfect candidate. But with this potential purchase of Spirit AeroSystems, at least indicates to me that, hey, that's a potential likely outcome, is this guy being the successor of Boeing.
It seems like it's a signal, Mike, that it's going to go in that direction where you have had this merger being talked about for the last couple months here, and any appointment of Shanahan as CEO was sort of shelved because they were discussing this deal. Now that this deal is going to go through for $4.7 billion, it seems like that clears the way for them naming a candidate, because Calhoun, correct me if I'm wrong, it's been since January that they've said that he was going to depart. So
yeah, the search for candidates has apparently not been going so well.
Right. So it's been 6 or 7 months, and now you have this merger going on. It seems like the next move after this is Shanahan being appointed as CEO. From an acquisition standpoint, this is not, to be clear to the listeners out there, anything that's really accretive to Boeing's bottom line in terms of making them more money. Spirit AeroSystems was losing money. They do about $6 billion in revenue, but the idea, at least the way it's being pitched, is that they're bringing Spirit AeroSystems in-house to get a better control of the manufacturing process.
Yeah, because Boeing's got a great track record of that over the last few years, right?
Yeah,
let's talk about this realistically. This is going to probably happen. I don't think the Justice Department is going to stop it from happening. But we have a company that is, our next story is literally the Justice Department charging Boeing with fraud and seeking a guilty plea from the plane maker. That's the next story in our list because of the lies that they told their regulator, and then the lack of follow through on adapting a good and compliant manufacturing process. That's the next story. And the solution to another plane maker's supply problems is, hey, let's put Boeing in charge of them. The ones that killed a few hundred people on their planes, and then after the increased scrutiny allowed for a plane with a faulty door to be installed and nearly kill a few more people.
Well, here's the other thing. Boeing was responsible for about 70% of their revenue, so it's not Spirit AeroSystems revenue. Right. So it's not as if they couldn't exert a significant amount of control and oversight when you have one client who's doing 70% of their revenue and they tell you to shape up or fix this or do that. You better believe you're going to respond because you've got 70% of your revenue on the line. So it does seem like a strategic maneuver that is targeted at trying to answer the concerns. We're going to bring things in-house. We're going to address these issues. Well, you haven't addressed the issues before when you probably could have still done the same sort of measures for a company that you're responsible for 70% of their revenue. And it really speaks to, Mike, what you said exactly. It's just been years and years of incompetence. And I don't know the airplane manufacturing space well enough to really have a good reason as to why is there no other candidate out there? Why is there not an external voice that could come in and shift the space? I understand how consolidated this market is. It's basically Airbus and Boeing in terms of manufacturing planes. There's some other small players out there, but how they couldn't get an outside voice with an engineering background to me to step in here, and they haven't appointed one yet, it just blows me away.
Well, I think the answer is pretty simple, is that they don't
want
want to, and they're not taking it that seriously. That's all it comes down to. Like, if you really wanted to talk about a turnaround story here, then you would appoint like the head of safety from the FAA as your next CEO or something along those lines. You would make a move that might not make you as much money in the short term,
right,
but would signal to investors that you're serious about the problems that you have, and they're just not doing so. Right? The candidates that they're talking about have decades of experience at the plane maker, and I get why. Right? This is not a simple company to run. It's as complicated as it gets, right? Like, maybe you could make the claim that, running SpaceX is a little bit more complicated in terms of an engineering factor, but not by a lot. And so I understand why, but multiple people have now looked at this company from the outside and said, part of the problem is that they have prioritized profits over safety for years. They have put MBAs and accountants in charge of the company rather than engineers focused on safety. And I think everything that has been indicated so far is a continuation of that. So in either case, Boeing looks like they will be buying Spirit AeroSystems for $4.7 billion in an all-stock deal. By the way, in case you're curious, Boeing stock, I believe their all-time high was in fall of 2019 when they were trading at just shy of $400 per share. Currently trading at $185 per share. Spirit AeroSystems is a similar story there. $92 per share back in November of 2019. Currently, as of today, trading just shy of $34 per share. So their stocks have been punished for the terrible performance over the last several years. The other piece to this is Spirit does operate a whole bunch of factories in Europe, and the insinuation is that they'll be that other 30% probably all goes to Airbus, and Airbus isn't going to be willing to do business with them if they're owned by Boeing, would be my guess. So we will see how that part plays out as well.
To be clear, not Spirit Airlines here. We're talking about Spirit AeroSystems. They're an airplane manufacturer, very different from Spirit Airlines.
Let's take a quick break. When we come back, a bit of China talk next on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Tax-efficient retirement planning starts with taking proactive steps to minimize your tax burden while you still can. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and as you approach retirement, it's crucial to consider the impact of taxes on your future finances. This month, our new guide is called Retirement Tax Efficiency. In it, we cover a variety of key areas from Social Security and life insurance to capital gains tax rates and Medicare brackets. The guide is designed to help you build a solid retirement financial strategy that limits your tax liability. Get your free copy of our new guide, Retirement Tax Efficiency, by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Paul, a slew of China stories out this morning, but I think the interesting one actually from the New York Times today is about a program that we had talked about a few months ago when it was announced, effectively China's version of cash for clunkers. And what the government announced at the time, which in true China fashion with a severe lack of details we talked about, was some subsidies for vehicle purchases and all sorts of different household technology, but washers and dryers were the ones that we referenced in the story here. And there are going to be big subsidies for people that turn in less energy efficient ones. You know, again, this is just like what we did in the United States post-Great Financial Crisis during that Cash for Clunkers program. Turn in your old car, you'll get a big tax credit, and yada, yada, yada. As it turns out, not all that surprisingly here, this has not been a raging success, and it looks like for a few different reasons. But as often happens in China, the central government puts together a proposal and a plan, and then they largely leave it up to the provincial governments to go and figure it out, and also leave the provincial governments on the hook for a large portion of paying for it as well. And those governments, while the central Chinese government is, of course, just fine because it doesn't do a lot of borrowing and everything looks fine. The provincial governments are a bit of a mess in terms of borrowing and debt burdens. For years, provincial governments had raised a lot of revenue by selling public land to private investors. There's not, as we know, as much of an appetite anymore for that, and so they've been trying to find new ways of generating revenue. But what it turns out is that, these Chinese central government programs were announced and implemented and, would pay for about 60% of the overall program. But when you get into the details, there's basically 113,000 cars across the country that qualify for these subsidies through June 25th. And the buyers of new appliances like washing machines and refrigerators have been getting offered discounts of about 10%. And so, big shock here, you may have had your shift reduced on your job because, the manufacturing center of the economy has been struggling. And are you going to go buy a new washer dryer because it's 10% off at the moment? No, probably not. When you have all these other concerns about your well-being.
The economic state of China, it can't be understated what a precarious spot that they're in. The property market in China has been in free fall for a long period of time, and now you have consumers that on the margins, there's really not a huge fix to get consumption up within the country because you have, like you mentioned, heavily indebted local provincial governments, and so they can't really borrow to entice economic activity. You have interest rates that are really low. You have, while many of the other global economies are dealing with inflation, you almost have a deflationary problem in China, and there's just really no perfect solution. And that's what you've seen trickle into other issues with global economic issues, with tariffs between the U.S. and China, tariffs now between the EU and China, though they're trying to meet to make sure those are getting pushed off, because basically China has heavily subsidized its EV market and tried to, because they can't sell them domestically, the electric vehicles, basically import them into Europe, and that's posing a problem there.
Yeah, I mean, for better or worse, what I think a lot of this comes down to is economics, but a bit of a social structure issue here. And just compare it to the United States for a moment. In the United States, we have plenty of problems with our social programs, and we've talked at length about how Americans do not save enough money. We spend entirely way too much, run up debt. But I think part of the reason behind that is most Americans fundamentally believe that, hey, if I lose my job, I might, in a worst case scenario, lose my house. I might, in a worst case scenario, not be able to, retire, but I probably won't starve to death. I've got social programs in place to allow me to make sure that I'm going to get paid unemployment. I've got social programs, food stamps and other things along those lines, which, again, I'm not the top advocate for the way these programs are implemented, but it does allow for an economy where people feel confident, hey, even if the economy is not perhaps great, I can still maintain my lifestyle and spend. In China, you don't have those same things in place, and they have no interest in implementing them. And so when the economy is looking like, hey, there's no hope, and other countries are slapping tariffs on our cars, and my shift at the plant is getting canceled because we just are at overcapacity, I might starve to death if that happens. So I need to be really, really careful about what I do next. And that's why a program where you offer 10% off a washer dryer in an economy that's not doing very well is very obviously not having the effect that the Chinese government was hoping for.
The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. The summer heat is upon us, but the holiday season will be here before you know it. In fact, it's already here. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
We talked about this a bit during Wall Street Watch, but shares of Chewy are moving down now at this point by about 4%. That's after Keith Gill, i.e. Roaring Kitty, disclosed a $245 million stake today, was it? Last week he posted a cartoon image of a dog, which sent shares through the roof that day, albeit very briefly. And then I believe just this morning he disclosed a $245 million stake in the company once again, pushing these things. Chewy, if you're not familiar, a pet supply company founded by another name you might recognize, Ryan Cohen, who has since been involved in different times in that company and GameStop, a number of these different meme stock companies. But I just genuinely shake my head and don't understand what this Keith Gill guy is doing at this stage. Seems to me like he's kind of tempting fate with regulators in terms of getting charged with something in the future. But in terms of what he seems to be doing, again, a not so subtly let me be clear about it, actually. It's not a pump and dump scheme from what we can tell, because we don't really have evidence that he's actually dumping the stock afterwards.
Right.
In some cases, he just seems to be losing a bunch of money. But when you post a meme about a dog, he's clearly attempting to affect the stock price of this company. And again, I don't know that that's illegal based on what he's doing right now. But then to come out the day later and disclose that you've got a $245 million position in the company, it's pretty clear what you were trying to do on Friday. And so I don't know where this goes. I don't know why he's doing it. And clearly it's not having the same effect that it did a few years ago.
And it seems like, I'm just reading headlines here on Bloomberg as they come by, that he's actually now being sued by a GameStop shareholder for what Mike was just alluding to, perhaps a pump and dump scheme. Because in order for him to take such a sizable position in Chewy, a 6.6% stake, you'd likely think, and I'm saying alleged, I don't know, that he would have had to sell some of his GameStop shares to fund that purchase. So
could be. Let's take a quick break, but a lot more to cover coming up in the second hour of the Financial Exchange. Quick break. We'll be right back.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is all about retirement tax efficiency. Mike, let's go through some of these items that people typically hit in retirement as key drivers of income. Let's start with Social Security and its taxation.
Yeah, so for only about 40% of American households is Social Security actually taxable, but it's a pretty low threshold where it does become taxable. There's a combined income calculation they put through, and up to 85% of your Social Security benefits can be taxed depending on your income.
Other places that retirees typically generate income, interest from bank accounts and CDs and things along those lines. How is that typically taxed? Any changes for retirees?
Yeah, so no real change other than all of your other income is going to adjust, and so the rate at which you pay might change, but you're going to be taxed federally as well as by your state if it has an interest or income tax on the interest generated from something like a CD. Whereas if you're generating it from some other tool, such as a U.S. Treasury bond, that interest is not taxable, at least at the state level.
What about when we look at IRAs and Roth IRAs? People have been contributing, but now they're finally withdrawing once they retire.
Once again, in most states, federal and state taxes, if your state has an income tax. The one nice thing there is you're not facing the FICA taxes that you paid while you were working, but everything else is coming out of those IRAs.
And Roth IRAs should be tax-free after the money's been in for 5 years. The guide this month is titled Retirement Tax Efficiency. 2 different ways to request it. First, by calling 800-393-4001. Second way is by visiting ArmstrongAdvisory.com. That number again is 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning and welcome back to the Financial Exchange. As we open up the 11 o'clock hour, markets are in mixed territory but very quiet. Dow off 12 points, less than 1/20%. Yeah, let's go with that. S&P 500 down 8 points, a little bit more than 1/10%, and the NASDAQ up 12 points, so less than 10%. It's 0.1% there. Yield on the 10-year Treasury sitting at 4.481. That does mark a fairly substantial increase over the last few weeks here. We were down at 4.2% just on June 19th. So something to keep an eye on there with yields climbing as much as they have just over the last couple of weeks here on that 10-year. We have oil markets. Let me take a look at oil prices here before we move on. $82 a barrel, so up again in the 80s as we head into that 4th of July holiday period. In terms of events this week, on Friday of this week, we will get a jobs report for the month of June. Going to be a pretty quiet day on Wall Street with a lot of traders off for the holiday. Thursday, markets are closed for the July 4th holiday, and on Wednesday of this week, markets will close early at 1 p.m. So relatively quiet week in terms of trading volumes and markets, but busy week in terms of data. And moving on here, sometimes we cover what I consider to be just horrible economic decision stories that get implemented into public policy, and we've made a big deal out of the California fast food minimum wage as one of those just fascinatingly dumb policies that I kind of can't wait to see how it plays out, quite frankly, over the next few years. In New York, I actually felt like we had the opposite there, which was not a bad idea in terms of an economic incentive to reduce traffic congestion on the island of Manhattan, and they spent a good amount of time getting ready for it, and ended up that I think pretty good idea ended up being scrapped by the governor of New York, rather, but kind of looking pretty dumb at this stage in terms of how this all went about. So for people unfamiliar, the plan was actually for this week a $15 congestion toll to take place on basically anyone entering the core of Manhattan. And I think they defined that as just around Central Park all the way down to lower Manhattan. If you entered, they installed cameras across Manhattan, which again, fairly easy to do here because I think there was like 8 roads that go south of that street, and hey, you're going to get hit with a $15 toll for anyone entering Manhattan. I think mainly this was on weekdays. It might have been cheaper on weekends, but in any case, they planned this all out. And by the way, they spent some $555 million to install tolling cameras. The governor then came in and said, nope, not doing it. We're not imposing this new fee. By the way, election year, so maybe that's part of it. But we're not imposing this new fee. And so New York City, with your $555 million worth of tolling cameras, your 100 employees that were going to deal with this customer service center, good luck figuring that all out. We're going to just leave things the way that they are here. So, I mean, the key answer here is, nothing fundamentally changes here. What a tremendous waste of resources by the city of New York to sink $500 million into tolling cameras that that can now not be used in any way, shape, or form because the governor has vetoed your plans. But fundamentally, like, this is the type of economic, it's a use tax is effectively what this is. And if you're looking for ways to fund the New York City subway, which is what they are attempting to do here, a use tax actually makes a fair bit of sense. Hey, you use our roads, you're going to pay for it. If you don't want to use our roads and are comfortable taking public transit instead, then we won't hit you with a toll. If you are a truck that's entering the city and taking up more space, then you're going to pay a bigger toll. This is like a sound economic policy as far as, again, you can debate whether or not you think it's fair and reasonable, but I don't think anybody looks at this and says, this is crazy. Who's thinking about a toll? Like, no, there are plenty of countries that go and implement this with a high degree of success.
Yeah, London was one that they used as sort of a case study in it, where they had adopted this in 2003, and they saw that they had the number of cars entering that area fell 18% in the year after it, and then you had more people riding buses and by about 6%. So they saw an immediate impact from it. And Mike, I'm just scratching my head. You mentioned the initial outlay of the cost to install the cameras, and you briefly touched on it, the revenue aspect of things is the real concerning piece here. Yeah. Basically, the MTA was really sort of banking on the $1 billion, I believe, that they were projecting annually from this congestion fee that was going to fund improvements to the subway system. And the fact that a politician, this is why I could never work in politics, by the way. This has been talked about since Bloomberg was in office back in 2007. And we're 17 years later. Some person out there is, almost graduated high school during this period of 17 years, and nothing has happened, right? Or they were on the cusp of this happening.
Literally had installed the cameras.
And then it just goes by the wayside. This would, if I was working in government, I would just quit on the spot. It's like all this effort I've put into this endeavor only for the week of it to be put into place fall apart.
Not even by the mayor of New York City, by the way.
Right.
Like it's the governor of New York State that's coming out here and saying, no, you can't go do this, which is just nuts. So again, I don't bring this up because I think this is a solution for every city in the country. It's not, right? Like, this works in New York City, where you have a transit system that runs almost 24 hours a day. You have service to almost the entire city island of Manhattan. This type of thing works. Would it work as well in Boston? No, probably not. It might not work in Boston quite as well, and downtown Boston isn't necessarily where we have the worst congestion either, so it might not be the perfect solution, right? Like, try and do this along 128. Well, how else am I going to get anywhere along 128? There is no other solution for me to get from Braintree to Woburn other than driving from around the city. And so it's not the perfect solution. It's not going to work in Phoenix, Arizona, to have congestion pricing where there's no public transit. But for a concentrated city like New York, it made a lot of sense, and I think was actually a sound economic policy that unfortunately is, well, in my view, is at least unfortunately not going forward at this stage.
This problem keeps coming up, and obviously it's not new the way our election cycles work, but political leaders making short-sighted decisions just to get themselves back in office or hoping to curry favor with voters, but not looking out for the long-term fiscal responsibility, physical wellness of, a particular city or country. It just frustrates.
Well, and you think about it too, like, let's say that you're right, it is all politics. And so let's say Governor Hochul
Yes.
gets reelected, and she says, okay, now we're going to move forward with this. Like, do those traffic cameras that have been sitting uninstalled and unmonitored for 3 years even still work at that stage? Or do you have to go and respend the $550 million that you just put into this? It's just a story of absolute ridiculous government waste.
Because it's a delay. They could turn it back on? Is that right?
Yeah.
Okay.
Yeah, they didn't uninstall the cameras. They're all just sitting there, dead.
Oh, boy.
Uninstalled. It's just absolutely preposterous in terms of what's happened there. So, yeah, I was hoping to, perhaps have a good lesson in public policy and economics at work here, but at the very least, that story is going to be delayed. And good news for all the rest of us is if you are planning on driving to New York, while the traffic is going to suck, you won't have to pay $15. So
no wonder we only have two 80-year-olds who want to run this country. There's no other candidates out there because politics are brutal.
Let's take a quick break. When we come back, I want to talk about Actually, another kind of really interesting economic type story here in terms of something that's playing out in the city of Boston this time. Let's take a quick break, and we're going to be talking about liquor licenses in Boston next on the Financial Exchange.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Tax-efficient retirement planning starts with taking proactive steps to minimize your tax burden while you still can. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and as you approach retirement, it's crucial to consider the impact of taxes on your future finances. This month, our new guide is called Retirement Tax Efficiency. In it, we cover a variety of key areas from Social Security and life insurance to capital gains tax rates and Medicare brackets. The guide is designed to help you build a solid retirement financial strategy that limits your tax liability. Get your free copy of our new guide, Retirement Tax Efficiency, by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine in only. Well, our month looking at state capitals is over. So should we begin a new theme? Sure, why not? How about we look at the Summer Olympics over the next month or two before the Olympics starts on July 26. Today is U.S. Olympic legend Carl Lewis's 63rd birthday. Before Michael Phelps shattered all gold medal records at the Olympics, Carl Lewis and Mark Spitz were tied for the most gold medals at the Olympics for a U.S. athlete. Today's question is, how many gold medals did Carl Lewis win at the Olympics? How many gold medals did Carl Lewis win at the Olympics? Be the third person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text. We'll give away the Applebee's gift card on Friday's show. That's 617-362-1385, and the third correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Paul, we've been talking a little bit today about economics and public policy. We talked about the New York City Transit. We talked a bit about the California fast food laws. I want to talk about one a little bit more local here to Boston, which would be the liquor license situation in the city of Boston. So there is, this is a story of economics playing out exactly as how you would anticipate, which is they have capped the total number of restaurant and bar liquor licenses in this city since... I think it's been a good 20 years since they've increased that cap substantially. And so, unsurprisingly, if you want to go buy a liquor license on the secondary market, then you end up paying $500,000 or more to acquire one of these things. Surprise, surprise. It's kind of akin, to make a comparison, it's a bit akin to the taxi cab medallion scenario prior to Uber and Lyft, right? Like, It's a similar type of scenario. Difference is, there's really no way to break into this other than very clearly violating the law, right? Like, yeah, you can go order cold tea in Chinatown and maybe get around the liquor license laws, but it's a lot tougher and you get shut down a lot quicker in the state of Massachusetts or anywhere for serving alcohol to customers without a liquor license.
No, it's amazing some of the workarounds that businesses have found out there by stringing together multiple bars off the backs of one liquor license and making them all connected. They highlight...
How silly is that, by the way? Yeah, it's Downtown Crossing. There's apparently 6 restaurants that have 6 different themes that are all served by one centralized bar in order to make sure that, we can actually have this liquor license. And, the economics of it is that they need literally 6 different restaurants to be able to afford the cost of these stupid liquor licenses in Massachusetts.
I'm trying to think if you're playing devil's advocate, what is the reason to have unlimited liquor licenses?
What is the argument to have unlimited
against it?
Here would be, I'm guessing
creating
the argument...
like Bourbon Street or something all throughout Boston.
I'm guessing the argument is the same one that we've had in Massachusetts for years of, religiously conservative blue laws about alcohol. And, it's the same reason that we don't have happy hour in Massachusetts. I don't know why lawmakers seem to think that by limiting the number of establishments that can serve alcohol, that Massachusetts and Boston residents are going to drink less. That doesn't seem to be a one-to-one to me. I don't really understand that one. But
and if you flooded the market with thousands of them, then those businesses are going to go. There's only so many spots that you can drink out of. The others will go out of business, right? So
I think the only argument that I can think of against quickly and dramatically increasing the number of licenses that are out there would be that there are restaurants that have paid $600,000, have financed payments of $600,000, and are relying on that as an asset of their business. And if you suddenly uncap the number of licenses out there, then these restaurants will be... The problem there is you're changing the rules midway through the game, which is not fundamentally a problem. But I think the right approach to fixing this would just be hey, 10 years from now, there's not going to be any cap, and we're going to slowly increase the total number of licenses every year by like 5% or something along those lines. So you have a set point in time where this doesn't apply. But again, you're talking about a city here, Boston and New York too, that have come out and said, hey, we have real revenue problems in this city. We are having trouble raising enough revenue to pay for all sorts of things. And issuing liquor licenses is not going to fix that problem. Right. Don't get me wrong. I'm not saying that Boston's going to replace all the commercial real estate tax revenue by issuing more liquor licenses. But again, why are you getting in the way of development? Right? The example was given here of somebody that sinks $150 million into a new hotel development and then basically needs to go through this black market, back way in terms of getting meetings with state representatives in order to beg for a liquor license. That is stupidity from start to end.
Sure.
Make development easier. And yes, if you're going to be sinking money into a new restaurant or hotel or any establishment into the city of Boston, you're going to need a liquor license in order to make that work. That's the economics of how these things work. We're not Utah. It's going to be a necessity. And so make that process easy. Allow development. It's just the laws that we have in place that just prohibit development and then taxing of businesses is absolutely silly to me. Couple stories about the tech industry and data centers, one of which we covered last week with Paul LaMonica over at Barron's, which is tech industry wanting to lock up nuclear power for artificial intelligence. So effectively what's happening here is the owners of roughly a third of U.S. nuclear power plants are in talks with tech companies basically to provide dedicated electricity to new data centers that are needed to meet the demands of the AI boom. So anyone unfamiliar, the processing needs and requirements to answer a question via OpenAI or Google's, what are they calling it now? Gemini. Tremendous computing power. And as such, the stock prices of some of these nuclear power generators have doubled in some cases this year as, investors have targeted them as potential beneficiaries of the industry as a whole. And on the surface, I know some are critical of this and saying, hey, if tech centers eat up all of the capacity of these power plants, then what's left for the rest of us? But on the other hand, if there's a bunch of new demand for electricity from nuclear power plants, then we might actually finally build some new nuclear power plants in this country, which I think most people that are experts on energy say would be a good thing.
Yeah, with the grid in the state that it's in, to have other resources out there that you could utilize to, separate from the AI boom, just service the electrical grid in this country in place, that would be great to have alternatives in place. And at least with more investment and more scrutiny on the industry in general, hopefully you can, further refine the technology, or Mike, to your point, expand the amount of power plants in this country. If there's a proof of concept through another industry, that certainly would be an effective measure there. But seems like from an investment standpoint, this is really a lot of focus on AI, is getting the requisite power in order to manage these calculations in these data centers.
Now, here's the problem. Ben, you all right with having the next new Massachusetts power plant over in Groton where you live?
Bring it on. Right to my backyard, baby.
Yeah. Paul, how about on the Sudbury River in Concord? Think that'll go through the local legislature?
No, we need the wildlife.
I don't think it's happening on the Charles and Needham either, would be my guess. So there are some other proclivities to getting these things.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
There are many factors to consider when planning for your retirement, including the importance of your tax liability. This is Mike Armstrong from the Armstrong Advisory Group. Reducing tax liability can be potentially more effective than chasing higher investment returns. If you are nearing retirement and need to understand how to help your investment approach and limit your tax liability, call us at 800-393-4001 and request our new guide called Retirement Tax Efficiency. We'll educate you on ways to create a tax-efficient strategy, as well as the basic steps that make up a sound retirement plan, including how to protect your money in a down market. Call 800-393-4001 and get your guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Today's trivia question was, how many gold medals did Carl Lewis win at the Olympics? Your answer? 9. Carl Lewis won 9 gold medals during his run as an Olympian, 10 overall. Lewis and Spitz were tied for the most gold medals until Michael Phelps came along and set a new record with 23. 3 gold medals. Today's winner is Mike in Sandwich. He has won a Financial Exchange Show t-shirt and is also registered to win a $100 gift card to Applebee's. We'll be giving away the gift card on Friday's show. Trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Retailers and restaurants across the country are noticing a pretty significant bifurcation in terms of the consumer, and you've got a couple of pieces here discussing just that. On the grocery side of things, executives at Procter & Gamble, Kimberly-Clark, and others are referencing that, hey, our very high-end brands, which again, very high-end might mean Annie's Mac and Cheese for General Mills, for example, and Blue Buffalo pet food are doing quite well. And they're seeing that, hey, these things are still selling even with increased prices, and we're doing all right. On the other hand of things, the demand for generic brand toilet paper is the item that's referenced here, but many others as well, is also surging, and I think speaks to a little bit of what we've talked about here, which is, if you were earning, $250,000 before all this, or 6 figures before all this, and you owned a home and had a mortgage, you largely haven't been all that impacted by the rates of inflation that we have seen here. But if you don't, and you're in that other category, which again, more than half of Americans probably are here, you're really starting to get stretched, and brands are responding in kind.
No, it's interesting that this piece is mentioned here. I've talked about this on the show before, but my father-in-law works in the food industry and deals heavily with grocers from Albertsons, but much more on a national scale, more so than the regional one. And the point he was making to me is that the Northeast, and particularly the greater Boston area, can kind of have us really under the false pretenses of what's really going on in the greater nation as a whole. It's a very wealthy area, the greater Boston area, which continues to buy those premium brands that you were speaking of, Mike. But he was mentioning, and as echoed in this piece, that the private label market share throughout many grocers throughout the country is picking up a significant amount of market share because you have those lower income families really trying to find value and look for cheaper alternatives because of the inflation impact that has hit them harder over the last 3 or 4 years than perhaps, to your point, the person making hundreds of thousands of dollars. And it sort of is mentioned in the survey done by the Federal Reserve, where the amount of Americans who have enough cash to cover an unexpected $400 expense at one point had reached 68% in 2021 when everyone was flushed with stimulus cash, but it's now down to about 63% in 2023, similar to where it was in 2019. And I do think that speaks to the larger issue that these lower income households are having trouble keeping up with their bills, and as a result, you're seeing more investment and spend in the lower income side of things, but still some resiliency on those premium brands.
Yeah, I mean, these grocers don't mind, certainly, either, to see the money going towards these discount or generic brands. They have, on average, higher profit margins on those items, even though the interesting part about all those generic items, if you haven't dove in, this is why I look at P&G and some of these companies as a pretty good resource on this, because they certainly produce Bounty and the high-end brands that we all see when we go to the grocery store. But they're also contracted to make the generic brands on very secretive terms. So Procter & Gamble is probably making the generic brand paper towel that sits in your grocery store as well. They're just not going to admit to it, and it's a separate facility, but they probably are very involved in the process and can speak to those volumes in one type versus another. On the fast food side of things, we've been talking about this now for a while, but you're seeing more competition from the likes of Wendy's and Burger King offering discounts and promotions. And those things really dried up for the last 4 years, right? You were not seeing big promotions at grocery stores, at fast food restaurants to get people in the door. People were not as price sensitive. And these days they are. And the fast food companies, especially through the usage of the mobile apps, are starting to promote this pretty hard. As I've mentioned on the program before, beware of those mobile apps, because the reason they're offering such heavy discounts is because they want to learn everything they can about you and all of your behavior on your mobile phone, but that's no different than your bank, your Uber app, or any other application that you use. It's just a new company that's entering into all of that. Folks, we've turned the calendar another month ahead to the month of July, and I want to talk to you about the brand new guide from the Armstrong Advisory Group out for the month of July. It's called Retirement Tax Efficiency, and we're covering a number of different subjects in here, but quite honestly, tax efficiency in retirement ends up being one of those big conversations that we have with almost all of our clients, which is, hey, how do I plan this out now that, it was pretty clear to me when I was in my prime earnings years and my kids had aged out, so I wasn't getting much in the way of deductions. It was pretty clear to me what the most tax efficient strategy was at that point. But now I'm getting closer to retirement and I need to make decisions about, hey, do I relocate my primary residence? Am I still going to use that vacation home we've had for decades? When am I going to file for Social Security? And where should I pull my first income out of, right? Like, I'm just retired. Do I start with my IRA or my 401k that I just had? Do I start with my Roth bucket? Should I be, pulling money out of just my cash savings for a period of time? What's the most efficient way, not from an investment perspective, but from a pure tax planning perspective, to plan out my retirement in terms of the tax rates that I will face? There are new taxes to be aware of when you get into retirement over the age of 65 as well that you have to be aware of. These are what's referred to as the income-related monthly adjustment amount that impacts your health insurance in retirement. So a lot of different features here that we cover in this brand new guide from the Armstrong Advisor Group. And if you find yourself asking yourself these types of questions, then call us and get a brand new copy of this brand new guide, Retirement Tax Efficiency, for July of 2024. The phone number for the Armstrong Advisory Group, 800-393-4001. We'll get a copy out of this brand new guide, Retirement Tax Efficiency. That phone number, once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul, we don't talk a lot about the technological changes in stock market trading because they're kind of boring. But when I started my career, which was not that long ago in the financial services industry, it generally cost you $8 to $10 to place a trade. Today, it's generally free. And when I started my career, it took 3 days for that trade to settle. And generally speaking, you did it between the hours of 9:30 and 4 p.m. when markets closed. A lot of that has shifted around. For those that haven't been following closely, the time for settlement just went down to 1 day from 2 recently. And like I mentioned, a decade ago was sitting at 3 days to settle trades out, meaning get your cash from that trade. The cost to place trades, generally speaking, for most custodians has gone down to free. And you now have this new wave of 24-hour stock trading. And that one has Wall Street a little bit, or some folks on Wall Street a little bit concerned about this. How does 24-hour stock trading work, Paul?
Basically, you've got brokerage houses out there like Robinhood and Interactive Brokers Group have adopted a way where you can trade 24 hours a day, 5 days a week. Sorry, is it 5 days?
5 days a week.
5 days a week. And what they've been doing here is sort of matching orders through their online platform on a regular basis. But this is something that has, Mike, been talked about for many years. It's been debated if they should expand the hours on the market.
I mean, I remember E-Trade running a big commercial for this, and me just laughing. Like, there's this couple out to dinner, and her placing a trade in her, I think it was her E-Trade account at like 9:30 p.m., and everyone being all impressed. I'm like, why do you need to do that? And why do you think that's a good, like, you're out to dinner with your husband. Just enjoy dinner.
But to me, liquidity is always going to be the primary focus here. And you're operating during times where there is not a significant amount of liquidity. And what that can lead to from an execution standpoint is either to your benefit or greatly to your detriment, oftentimes to your detriment. If there are not, what a market is matching buyers and sellers. And when you don't have an equal balance of one of another, then it can lead to executions that are not favorable for the end customer. So,
well, how many times have we talked about on this show, like, oh, stock was up this much in pre-market trading and then ended up down for the day, right? Like, when there's not a lot of liquidity in markets, which happens during closed hours for the New York Stock Exchange, tiny things can move market. I was thinking, actually, I mentioned this at the beginning of the show, that on Friday of this week, there's probably not going to be a lot of volume. Right. And this is kind of a microcosm of what we talk about daily on the evening trades, which is when there's not a lot of volume and not a lot of traders out there, weird things can happen. And it doesn't necessarily mean you're going to lose money. It just means that sometimes things can be more volatile than you would otherwise expect.
Couldn't agree with you more. I had a biotech stock. Then when I got started in the industry, I was following very closely. And several mornings, I would come in and check it in the pre-market, blown away that I thought it was going to rise by what the pre-market indicators were dictating, 20%. And to your point, just like what we saw with Chewy today, right? It's a good example of that. Pre-market showing up 16%, at least as of last check, down 5 or 6%. So when markets are closed, strange things can happen, and maybe not for the best for certainly us in the industry. We do not want 24 hours to become a thing. No one wants to be taking a call at 2:30 in the morning to get an execution done.
Let's take a quick break. When we come back, Stack Roulette on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
There's an issue cutting through the partisanship in Congress. It's AM radio. The overwhelming majority of legislators, Democrats and Republicans, support a bill to keep AM radio in cars. But time is running out. Text AM to 52886 and ask Congress to bring this bill to the floor for a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required and no money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Time for a bit of stack roulette. I'll go a bit off script here. A businessman in New Hampshire will be facing federal charges and is preparing to admit that he willfully failed to file tax returns and paid nearly $14.8 million in business and personal income taxes over several years. Andrew Park, who co-founded startup software business in 2014 and then operated that business from Hanover, New Hampshire and Bedford, New Hampshire, is accused of deducting taxes that weren't deductible. Park was the CEO for Car Now, a tech company that serves car dealerships. Mainly, this is being reported by the Boston Globe this morning. So, a bit of a tax fraud story for us this morning. Paul, what do you have for us?
Tesla is due to report its earnings tomorrow, and they're expected to have weaker sales number again in the second quarter of their fiscal year, with a 5.4% drop from a year ago, estimating 441,000 vehicles in the second quarter. We'll see what numbers that they come out with, but it speaks to sort of the bigger issue that's been ongoing with Tesla this year. They really haven't unveiled a new model over the last several years. Now, they have touted this August 8th robo-taxi event as something that investors can shift their focus on. Musk has also promised that they'll introduce fresh models by early next year, but the specifics regarding those are rather limited, and it's getting to a point in time where certainly when Musk came out with the robo-taxi piece and promising of new models that did reinvigorate the stock a little bit. It's still down about 20% year to date, but it's getting close to kind of put up or shut up time for Tesla over the next couple months here. They are going to be coming in with weaker sales numbers, but they need to continue to justify the premium that they trade at, and new models or something to sort of spin it as a growth stock needs to come out, because there's a lot more competitors in this space, Mike, and just the EV market in general has been challenged. So in order to command the valuation that they have, they need some sort of catalyst, and hopefully it's either, stronger sales numbers or the big hyped robo-taxi event coming August 8th.
Yeah, stock is up today, by the way, 6%. I'm not sure what's moving it today, Tesla's stock, but it does. I guess I have a question for both of you, which is, I know they haven't introduced a new model in a number of years, and people keep pointing at that as, the thing that's keeping down their sales. And I don't know. I don't buy it. I know that, yeah, certainly if you were able to roll out a new $30,000 car at Tesla, then I think you would prompt a whole bunch of new sales. But that's not what anybody's really talking about anymore. They're talking about like a revamped Model 3 or S or a redesign, and I mean, maybe that's what people are looking for, but I feel like the main prohibition to Tesla selling more cars is that they've already sold the vehicles to the early adopters of EV technology, and there's just not another 10 million cars to be purchased in the United States. I just don't think that there's that demand or enough income around there to say, yeah, there's a bunch of people that still want to line up and buy it if they roll out a new line of vehicles.
That's a fair point on the sales side of things, but they are at least supposed to be the innovator in the space. And the fact that the company that has really brought EVs to the forefront in the United States hasn't come out with new product innovation when it trades more like a tech stock than an auto manufacturing stock, that is probably the concern that that's the problem that investors have. But I would agree with you, if they came out with a new model tomorrow, does that really stoke, hundreds of thousands of more cars being sold? I don't think that really would get those people who are leery of buying an electric vehicle on board.
But maybe that's not what you need. Maybe a new model does get the existing Tesla owners to trade up and go buy it. Although, if it does, I'd be surprised because the resale values on Teslas have been getting crushed recently. So again, that's why I bring up, is a new model actually going to produce the sales that Tesla
wants? The more
wants?
affordable option. That's probably what you need to
I'll admit that I'm
with.
seeing more Cybertrucks here and there.
Are you really?
I saw one on 128 a few weeks ago, and then I was in Arizona, as you know, on working vacation out there and driving. By the way, if anybody has ever driven from Sedona to Flagstaff, Arizona before, I know it sounds really weird, but it's actually a beautiful drive that I get to do every once in a while, and saw one driving from Flagstaff back to Sedona, Arizona while I was out there, and I mainly point them out because my kids find them so cool and weird looking. They are tremendously strange looking.
They are really strange looking, but if your kids find them cool, then maybe they're doing something right. Because I sit and say, geez, I
would never drive one.
Yeah.
Again, my kids finding them cool looking because there's nothing
right?
like it on the. I mean, other than the old Aztecs, there's really nothing that looks like the Tesla Cybertruck.
It's hideous.
Available on the road. I think it's ugly as hell.
Hideous.
But, again, it kind of looks like an alien spaceship or something. So while I agree with you, it does stand out. So we'll give him that. It's definitely different than just about everything on the road. That's about all the time that we have for today's financial exchange. Markets remain here. Actually, have now just shifted to all positive territory on the main three indices. The Dow is up 32 points, just shy of 0.1%. The S&P flat, and the NASDAQ up about 58 points, or 1/3%. It's all the time we have. Have a great afternoon. We'll be right back at it tomorrow and then Wednesday here on the Financial Exchange.